Hello again, this is Alex with MasterChartsTrading.com and this is market recap for Friday, August 30th, 2019. As always, please hit the like button, subscribe to this channel, as well as share this video and this post with others. So again, we're going to go through pretty much the same presentation as normal. Stocks, world stocks, junk bonds, some more straight follow-ups, Forex, as well as Litecoin. So let's just get right to it. Right, so let's look first at S&P 500, of course. And to my subscribers, I sent what I thought was a triangle consolidation. I'm gonna draw it, maybe a little baby triangle there. Uh, Now I think we have a breakout out of this triangle, so I think we could easily see fresh record highs here. It's not that far off, and generally speaking, S&P 500 and by extension, many of the various funds that correlate highly to S&P are pretty much going to break to new record highs. I'm fairly certain that this is going to happen very soon. Um, Obviously, it's not guaranteed. We could continue, we could turn around and retest the blue line. Again, throughout the presentation, I will be using my own indicators. You can find out more about this green, blue, red, and yellow lines by going to MasterChartsTrading.com. You can also find me at TradingView on TradingView as at MasterCharts, and you can chat with me as well. So if we look at this chart, these are record highs. Where would we want to be buying it? First of all, why do we want to be buying it? The reason is because we have closed above the blue line back here in 4th of February. We have not yet closed below the yellow line. For stocks, I use the yellow line as a line in the sand. That signifies a bear market. So I wanted to show that during the months of September, this is called the seasonality tool. You can find it at StockCharts.com. If you click on charts and tools right there, you can find this seasonality tool right there. So this seasonality tool averages out total return of S&P 500, in this case SPX, and as well as percent of month in which S&P closed higher than it opened, and I'm given about 20-year trailing period. You can see that September is by far the weakest. You can see it's only 53% of the time uh, it closed higher than it opened, and the gain was actually a loss, minus 1%. And if we go back to, let's say, let me see where is from 1990 to 2009, we can see a similar picture. September, one of the weakest month with a loss in general. So overall, there is something called the weakness in September. Many traders are aware of that. Will it happen this year? Nobody knows. But the way things been looking right now, I'm seeing potentially new record highs. So we should be concentrating on that. Same goes for QQQ, very close to record highs. Dow Jones, pretty much the same thing, also very close to record highs. Some of the sectors that are leading are, of course, the interest rate sensitive ones, the real estate. Here's record highs on IYR, very close to record highs, actually a close at record highs right there today on Friday. So overall, obviously a bullish chart. We want to be buying it. We were buying it, back in January when there was a good opportunity. Right this instant, there is really no opportunity to get in. Let's look now at some of the other sectors that are leading, and of course, utilities have been on a tear. We were trading them as well, also since January. Big gain, just a very nice over 17, almost 18% gain. So congratulations if you guys opened. Utilities and real estate traditionally are defensive sectors. That actually means nothing because they are both stocks. And I again look at utility stocks and real estate investment trust stocks as part of the stock market, not part of the bond market. Even though they are somewhat defensive, that means really nothing. It just means that some stock sectors are leading, in this case utilities and real estate. If a true bear market starts, and I keep saying the same thing, if the true bear market starts, then utilities also will get sold and real estate will also get sold. Worldwide, this is a very diversified ETF, VEU. So this is Vanguard International Equity without United States. So right now it's underperforming obviously S&P 500. In fact, it kind of entered the caution phase. But the action over the past few weeks kind of gives me hope that we will actually go ahead and push slightly higher, not that far, just maybe like a percentage point, not even. Yeah, about a percentage point higher. And if we do that and we close above this resistance level, support resistance level, which is currently highlighted by this blue line at 49.56 where I'm hovering, I think we can expect a move higher. So overall, there is now hope for the general stock market of the world and stock markets of the world. And I think, if we just push slightly higher, about a percentage point close above the blue, I think we have a very good chance of pushing significantly higher afterwards. Right this instant, there is still a bit of a caution in the markets, but I think the traders will eventually, find the direction. It could be to the downside, by the way. Right this instant, my bias is still to the upside, and if we see a close above the blue, then I'll definitely be buying. Okay, so I wanted to show some of the recent trades that we did at MasterCharts Trading. Here is Costco. This is an actual alert from 8th of March 2019 right there. Now I already highlighted this trade, I believe, around July of this year, and at that time it was up 26%. Since then, there was another leg higher, and currently it's up over 35%. So overall, obviously, a very nice trade, very easy as well. You can see that we simply bought above the blue line right there and breakout above the blue line on 8th of March 2019, and we just did nothing. We just simply sit in the position. And I'm realizing now that it's probably the best thing because like I keep taking profits, but I'm realizing that during the general stock market, general bull market for stocks, I think the smart thing to do would be just to get into a position and just sit in it and do nothing. So another very nice gain here for Pepsi. Uh, Here's Pepsi. Let me just annotate it. I'm sorry. There you go. Here is Pepsi on PepsiCo daily chart. Obviously, I trade mostly on pretty much exclusively on daily charts of late. Here's an alert that happened in February of this year, 2019, on 4th of February. Very nice move higher. Now over 21%, almost 22% gain. So again, you can see that a smart thing to do would be to do nothing and just to sit in a position and to wait for the gains to materialize. Uh, yeah, so sometimes it's best to just, sit and do nothing. And there's even a saying, very classical saying, uh, the man who can be right, but at the same time sit tight is rare. So I'm right, but sometimes I'm not able to sit tight. Are you able to sit tight? If you have a comment, do make a comment below. All right, let's switch gears a little bit and let's look at junk bonds. So junk bonds and stocks correlate highly to one another. Stocks and junk bonds usually move in lockstep together. Uh, we're looking at a peak right there, a high right there on the 20th of June, and since then we kind of, pulled back. But now you can see that we actually are moving higher again. And yesterday on Thursday, the 29th of August, we made a high above previous peaks. So this is compared to S&P. Let me show you S&P. S&P is a little bit kind of underperforming junk bonds. So junk bonds you can see moved already higher while S&P kind of consolidated sideways. So to me this actually looks like a bullish divergence. In other words, junk bonds maybe know something that stocks don't, and they're already moving higher, and stocks will eventually catch up to junk bonds. I think junk bonds, if they break out to new highs here, it will be very bullish for stocks. Now, treasuries and other investment grade bonds had an enormous run recently. We are obviously trading it. You can see these are actually my entries. This one on December 20th, 2018, and here's another one on 11th of January 2019. This one was good for 24% gain, over 24% gain. And I still have a quarter of the position remaining. You can see I sold 3/4 of the position, uh, but how would I know that the move would be so big? You can't know that. So this is the reason why I, take profits. But once again, smart investors are probably better off doing nothing and just sitting in the position. Now this move, it's really large, so a pullback I would be surprised if there would be no pullback. And I think it would be a healthy thing if it pulled back pretty soon. We'll see if it does. Now, a pullback for TLT treasury bonds, especially the long ones, would mean that TYX, the long dated um, yield, would actually come back up slightly. So that's a good thing. So let me show you that dynamic yield curve again. And you can see it says where I'm hovering it's kind of normal, but I don't think it's very normal because you can see that 3-month treasury bills are basically identical to 30-year treasury bonds in yield, and that's not very normal to me. Now in the past, if um, short-term yields went above the 30-year yields, we had a yield inversion event, and then see right there where I'm hovering, it says inverted, and afterwards not exactly the same time, but pretty soon we had a collapse here in 2007 2008, and of similar nature something happened the year 2000. Will it happen now? Nobody knows. Times are somewhat interesting right now, uh, so again we will wait and see, but overall I don't like this. uh, it's not a good sign. Hopefully, if bonds finally pull back, then TYX, the treasury yield, the 30-year treasury, will also rise. And if treasury yield, the 30-year rises from here, then there will be less chance of the yield curve inversion. So overall, obviously beautiful trade. Congratulations if you opened. If you're a MasterChartsTrading.com member, subscriber, paid subscriber, then you obviously are getting very big moves and they're in your favor. So another one here is intermediate bonds, IEF. Also alert was sent right there, excuse me, where I'm hovering on the 24th of December 2018, good for over 10% gain. And even the short-term BSV, short-term bonds, also alert was sent here in December with a beautiful move higher of over 3%. Now, short-term bonds obviously don't move as much as the longer ones, but still, it's a big move. So overall, overall bond market AGG, and there are many uh, mutual funds also that are kind of mirror movements in AGG. So they are part of many of the 401k and retirement plans here in the United States. Uh, you can see that just bond market did nothing but go up here in 2018 basically. So generally speaking, this is not a very good sign because we are bonds are more of a risk off kind of assets, and stocks are more riskier, risk on kind of assets. So if the money is being pulled out of somewhere, and usually people pull money out of stocks and put them into bonds because they are not 100% sure of what's happening in the future. And if this is happening significantly, then we see move higher for bonds. So I think time has come for the pullback in the bond market. Will it actually happen is an entirely different story. All right, let's switch gears and look at Forex and gold action, and at the end we'll finish off with cryptocurrencies. So first let's look at the dollar index. And if you listen to my previous videos, I kept saying, especially here in June, I was like, oh my God, it's so close. Look how close it came to the red line. Uh, and it still didn't break down. So dollar made a new high this Friday versus the basket of other currencies. So far, still no downtrend, no change in trend for the dollar. Dollar trend is still up, which is weird because when we get to gold, we will see that it is a little bit of a weird situation. Here's euro versus US dollar. Now, this downward arrow, it's just for information. I did not send this alert. Unfortunately, now looking back, I didn't send this alert. But if you had my indicators, and you can have those indicators on your chart, MasterCharts Trading Price Action Indicators on your free TradingView account, you can have them. So you can see that this would have been a good for almost 400 pip move. Actually, it is a 400 pip move. So if you shorted euro here, then congratulations. So what does this all translate into? Weirdly enough, gold is also going higher, and you can see that it's XAU where I'm hovering over USD. So if USD, like here, it's getting stronger and stronger, shouldn't XAU USD be going down instead, because this lower part of the currency pair should be pulling it down? You can see that it's not happening. So we can see that there's a divergence now between gold and dollar. It's not exactly a normal situation. That's why I'm saying right now we have strange things happening in the various markets. So with gold, um, I mean, also a tremendous move. This is all 21% almost move for gold futures. Again, if you caught this move with the futures account, you could be it's just a home run for you because of the leverage. Uh, I caught this move with the GDX Gold Miners ETF. You can see right there. This is actually my entry right there on the 31st of May. And this is one of those picture perfect trades. You can see that I enter, trade goes immediately in my favor. I take profits, trade continues higher, I take more profits, Trade continues even higher. I take even more profits. Now I have about a quarter of the position remaining, and let's see. I mean, it could go higher. Who knows? I mean, it's already up 42%, and this is average of various gold miners. So overall, there's many different gold miners within GDX, and many have very strong gains. We have many of the subscribers are uh, actually reporting very nice gains recently. I got several people telling me about Newmont mining, about Yamana Gold, about Royal Gold, about Barrick Gold, etc. So, and also Core Mining CDE. So overall, many different gold miners are breaking higher. Um, and this is weird again because XAU USD is going higher, but USD is also getting stronger. So a strange situation indeed. We will see where this goes, but let's keep an open mind. All right, let's finish off with various cryptos. So here's Bitcoin. You can see several alerts here. Um, one of the alerts very recently, in fact, this was my actual trade. Right there, I entered on 6th of May at 57.11. Sold half here at 7,700. It just took off. Then I sold another, and then I just sold a quarter. In other words, I closed my, okay, so I sold another quarter right there at 10,000 some, and then I closed my position a few weeks later. So overall, just an incredible trade. Um, Bitcoin was up over 138%, and several alerts afterwards also were successful. So right this instant, I am not crazy about cryptos, and mostly I'm not crazy about them is because of Litecoin and Ethereum. So here's Ethereum with a breakdown right there on 14th of August this year, 2019. Now this downward arrow I'm just showing you for information purposes, but it looks like the trend has changed to the downside, and you can see that it's already if you shorted it right there, let's say on 21st of August, it's already 12% move in your favor. um, then another one I'm also worried about, of course, is Litecoin. So if you shorted it here, that's already a 13% move in your favor. So you can see that the reason why I'm even saying why would I want to short it is because you can see that the price has come down towards the red line and closed below it right there on 25th of August where I'm hovering. So this is all I need to know to make a decision that now we see a change of trend. And for Forex instruments as well as Litecoin and gold, I usually use the red line as my line in the sand. For stocks, I usually use the yellow line. So overall, looks like cryptos are under pressure, and I'm again really reluctant to trade Bitcoin because of this breakdown for Litecoin and Ethereum. All right, that's it for this week's recap. Please head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word, and click on sign up. And we have three different levels of service. We have alerts, and alerts are things like this. For example, for Costco, um, this is an alert. This is an actual alert that was sent to subscribers, good for 35% gain. Uh, this is the kind of thing we do as far as alerts, and there's many different asset classes and various stocks that we follow: gold, commodities, and cryptos, as well as large and small caps and mid caps as well. Of course, you get the free 30-day trial, as well as lots of training materials and answers to your questions. If you have any, you can ask me directly. If you want the TradingView indicators, now I'm talking about this green, blue, red, and yellow line, You can also sign up, and it's only $29.99 per 95 per month, or less if you sign up for the yearly. Um, Many people report that they're extremely helpful, the indicators, and again, I'm showing them right now. This MasterCharts Trading Price Action Indicators. You can find me on TradingView at MasterCharts, or you can just simply sign up on my site at MasterChartsTrading.com, and I will open the door for you. It's really simple. And of course, if you want both the alerts and the indicators, then click on that and sign up. It's $49.95 per month. I think it's a steal. And of course, if it's if you sign up for a yearly billing, then it's dirt cheap. So do head over to MasterChartsTrading.com, sign up, and if you have any questions, please let me know. Share this video. If you have any comments, leave them below. And that's it for this week's recap. Have another great trading week. Bye bye.